Welcome back. This is now a tutorial on the bottom part of the income statement covering net non-operating earnings and expenses and retained earnings, net earnings and retained earnings. So we have explained up until the total net operating earnings, but there are other expenses that the company will support which have nothing to do with operation. Number one, there are some income that the company may benefit from. You may have license your technology. This is an income that will go directly to the home office for chips or for PC. You may have income in terms of an interest for positive balance of your bank account in the various area. You see that this company has enough cash to generate close to 54,000 Swiss francs worth across the different areas. And then miscellaneous income is a payment that would make another company to you. For instance, if you are doing R&D or if you have rendered a service to another company in Intopia, they would pay via W1 something which will be an income. This then comes to a total, not generally very big, but that's additional income, so not to be disregarded. And then comes the much bigger non-operating expenses. Number one, you may have bought a license instead of selling it. License for chip, license for PC. Again, this is going to the home office. In fact, it took place in the home office for PCs in this case. Market research, if you buy any market research from Nippon, then that will be listed here. Your R&D will be listed here and there for chip and for PC. Interest expenses, well, if you have a loan or if you have taken a bank loan or a loan from another company or if you have supplier credit, then you will pay an interest for that. And this, of course, this company has everything, including in the home office and in Brazil, because as you remember, they had supplier credit. So altogether, they have a fair amount of credit of interest payments, close to 500,000 Swiss francs. Miscellaneous expense is the flip side of the miscellaneous income. Via W1, you may have received money, but you also may have paid money to another company, maybe for doing R&D or something else. This would be listed here. The cost of exchange is when you buy and sell currency in an area, there is a little cost, not very much, something like 0.5%, which is charged to you on the amount that you change. So here, in this case, they have probably bought or sold some currency, and this resulted in $5,000 worth of commission. Total non-operating expense is the list of everything that goes above. And then we have realized loss or realized gain. You recall that in the balance sheet, you have unrealized gain and loss, which was the potential loss of selling a money that has devalued. In this case, they have been exposed to a realized loss because they have probably sold currency that they didn't, that had lost some money. So they are affected by a detailed loss. We would have to look into the currency statement to know more on this. Gross margin is the net from this point, so net operating margins plus non-operating income minus non-operating expense and realized gain and losses. That would go to gross earnings. On that basis, you are going to pay a tax in any area where you make a profit. This company has made a profit in the US, it pays an income tax. Actually, it will pay because you pay in the next quarter, but still, it has to be accounted for in this quarter. Of course, there is no income tax in Europe because they made a loss, same in Brazil and in the home office, but nevertheless, on the global account, they have made they have paid an income tax at the consolidated level. There is no capital transfer tax here. And then finally, we get to net earnings, which is gross earning minus income tax. And then you decide whether you pay dividends to your shareholders, or if you pay none, you retain everything. This company has decided to retain everything, where every profit where it originated. In the US, they keep everything, and of course they can't distribute any dividends in the other area just because they make a loss. And like usual, the consolidated column is just the sum in Swiss francs of the different items in the various areas.